Hello, this is John Piper with the weekend video clip, and it's Saturday the 28th of June, looking at an early chart of FTSE. I said in yesterday's report that 6.7 may be the low, so I want to show you the wave count here in a bit more detail. That looks like an A wave down to there, then got a three-part B wave up to there, then an A, B, and I showed you the wave count here, which shows this as a complete 5-wave move. So that's a 5 wave. The 3 wave itself splits into 5. That's 1, 2. Then you've got the 3, and the 4, and the 5. So there's a fair case that that is the low there. Before we leave this chart, the triangle is I've been talking about goes from these lines here. So you can see that we broke below it, broke back in, and now back below it again. And there is some kind of resistance, the continuing line around 6.820 or thereabouts. And let's go down the leg. Okay, this is the low here, decent spike as well. 1, 2, 3, 4, 5. Not an ideal form in the sense the third wave is a bit subnormal, but clear ABC to there, and then another little rally here. So I would expect on Monday we're going to start to motor. Monday should be a pretty good day for the market. So I'm looking to buy the FTSE on Monday, I would think, depending on what we actually see, of course. We may want to retest the level down here. We possibly might even go a little bit lower than that, as though there is a possible alternative counter. I mean, maybe that's a 1 wave. That could be a 2, it could be a 3 there, so it could be a 4th wave. It's a bit long in the tooth compared to the wave 2 there, so this could be a possible 5th wave. And in fact, we can count 1, 2, 3, 4, 5. So there was another potential. It could be an ABC. I think given the the clearly defined wave pattern, the decent spike buying response, it seems more likely that we have now seen a low, that we are going up. But obviously be wary, especially if we see FTSE below 6.740. That'll be a warning sign of well, quite an important warning sign. Looking at the DAX, we have a similar, well, it's not a similar pattern in a sense, but we have got a possible ABC with, again, a fairly good buying response there. A bit of a spike below 9,800 at round numbers. Round numbers are very important markets, and that held. So again, we have a potential buy signal coming in, especially if we see another buying spike below 9,800 on Monday. But again, the market looks potentially positive, less positive than FTSE, but still positive. Have a look at the DAX now, so the Dow now. Okay, the Dow also seen a bit of a bounce. Let's have a look at the pattern here. This high here was a failed break, so that was a new all-time high, but a failed break of the high here. So we can start our wave count from that particular point. And this is a 10-minute chart, so we've got the all-time high there. Then got a move there, which could be a wave 1, although it's a 3-part form. Then you got a ABC2. Then you got a 3 down to there, a 4 to here. And then a possible 5th wave, in fact. So we have got a 5-wave decline there. It's not an ideal form, firstly because of the ABC nature of that one. But otherwise, it's pretty good. We've also got an A, B, 3-part B wave, and A, B. Sorry, 1, 2, 3. So be wary of the Dow on Monday, especially if we see a bit of a blip up early on, which fails. If we see a failure on the Dow, that would be a suggestion that we could in fact start to fall away quite sharp. So a bit of a contraindication there. FTSE looks pretty positive, as does the DAX. I mean, these declines do look corrective so far. Even this move on the Dow, we have got the 5 waves there, but it's not a very dramatic move. It all depends what happens on Monday. Even so, we see the thing shoot up, that would obviously be a lot more positive. But I say a failure following one final rally, which could be a 5th wave. I mean, 6.9 is quite important as well. Could lead to a much sharper fall, especially obviously if that level there breaks around 16,740. Alright, finally look at gold this morning. No change overall. We've got this triangle building up, but it could be that is actually a 1. This is a 2. As we've discussed, it all depends on what this rally does. So let's have a look at that in a bit more detail. We still have this pretty clear count: 1, 2. 1, 2, 3, 4, 5, and now this corrective drift, which could be a wave 4. So let's repeat that: 1 and a 5-part 3, the 2 wave here obviously, and then the 4 here. So one more rally, would give us a fifth wave. I mean, it's possible that it's a fifth wave there, but it's pretty subnormal. So it's you know, with Elliott you have to take what you get really. So we could in fact just start shooting up almost immediately. In fact, if that were the case, and that was a fifth wave, but it's because of the nature of these waves. I mean, they both lasted a week or so. You know, it's unlikely that you're going to get a very short subnormal fifth wave in that case. So it's more likely that we'll do a bigger move. But even in fact, a fifth wave could still be quite a good move. If you look at this one here, went from 12.50 up to 12.80, so that's quite a tradable move. $35. This one 12.60 up to 13.25, $60 or so. So you know, a decent move, even if it is just a fifth wave. So for shorter term traders, that's something to be thinking about. All right, well, there's quite a few opportunities next week as I've just gone through. Good luck with the trading. Thanks for listening, and bye for now.